Morning, Fractal Effects team. Now, this is a heavy news week. We got CPI and PPI. With this entire beginning of from January all the way until like mid-February has been absolutely just packed, jam-packed with news, obviously economic news, and then just random news as well, as far as what Trump is doing with the tariffs. So a lot of fluctuation in the market back and forth. It's stuck in a range right now. Yeah, this week, obviously, there was a Monday and a Tuesday was the only actual viable trading days. And then today we had Fed Chair Powell testifying. I believe it's happening right now. So a lot of manipulation and a lot of chaotic price action in the markets right now. But we're going to take a look. It's been a minute. So let's take a look at what's happening. So we have NAS here on the left, US 30 on the right. Let's start with NAS. We have a downside expansion model. We originally had a sell model that took out all the highs. I believe that is when Powell started testifying. Now we're sitting in a purple zone. We'll see what happens from here. No confirmation. Today is not the kind of day I want to trade. We're going to be doing more or less just market analysis, going over certain features of the indicator, and we'll talk more about what we've actually added to the back end of Fractal Effects to help you guys out. There's a lot of free content now as well on Fractal Effects. If you go to the footer, we'll probably put a tab at the top as well. But our blog, check that out. That's always covering free industry news and market-related topics. And then we've also added a new section, a market watch for our users, where we'll be going over specific sectors, what the analysts are saying about specific stocks. We'll be giving projections. And again, even though we can't give financial advice, we brought experts to the table that can. And then utilizing that information with top-down market analysis, you'll be able to find your positions in stocks, commodities, pretty much anything. Let's go over a couple of things today. So we've added to the indicator. Now again, these are two indicators on top of each other. That's why it looks a little messy, but let's stick with it. So we've added to the blue zone indicator our new day opening gap. For anybody who doesn't know, that's the gap in the closing price of the previous day and the current day. Right there, it's called an NDOG, new day opening gap. And then there's a weekly gap from Friday's close and Sunday's open. And that's called the new week opening gap, or NWOG. Sure, we can find it here. You can change these colors to whatever you'd like, but we have it in orange. Now the NWOG, this is an area where the market retraces to throughout the week. You could come down here and tap it on a Monday, Tuesday, and come back on a Thursday. The NDOG, those are good for daily. That gap is usually filled in somewhere during the session, especially if there's no news day. If there's no news day, then the market returns back to what's called fair value. And the fair value is exactly where the the new day opening gap was, where usually midnight line, the opening of the actual true day, which is also marked here as well. That's part of this indicator as well now. Right there, you can see it. True day says, and you can change the color of this. I don't even know what we have it set up as. Change that to like something that's a little bit more easy to see. So true day, let's change that to blue. Or you know what, let's change that to white, just so it's a little easier to see. I'll change that from dotted to dashed. I just want to know where it is. So now you know where true day is. So these are the areas that the market reverts back to on days when there's no news. And right there, you can see that it came back to the end dog, which is another take profit, another area of take profit. And remember this analogy. If you're headed somewhere, let's say you have to go to a location that's about an hour away from your residence. And if you're 75% of the way down the road and you suddenly remember that you left something at home, you're not going to turn back around and go all the way back unless it's super important. You're going to most likely just end up going to your destination and saying, you know, it's not a necessity, I don't need to go back. That's similar to how the market works. If you have this many levels all jam-packed in the same area, as mentioned before, usually we use the purple zone. We can use the purple zone as our take profit, just like you can use the blue zone as a take profit if we turn around and head back down. But when you have the end dog that close to the purple zone, you know it's going to run all these levels. If there was a high here, it would probably run that high as well. Currently, there is our previous day high. So the indicator marks that out for you as well now in yellow. So there's the previous day high, and then the previous day low is somewhere down there. There it is. Now, again, if this was Thursday and the market was pushing down and we had our weekly range, which is in aqua, and you had your previous day low right there, you know it's going to run both of those. If they're close together, there's a high percentage that it's going to run through all of those liquidity zones. And today, so there's your blue zone. First it tapped it, pushed down. Then at open, we jumped over it, and we left this massive NYC fair value gap, the opening gap, and it has not come back to fill it in. Just tapped it and took out the end dog. Familiarize yourself with these words. Again, if you're in the Learning Hub, we go over everything. If you're just watching us on YouTube, make sure you understand what the end dog is, the NWOG, what all these levels mean. We won't be going too much into detail because that's the whole point of the Learning Hub. We've already put these videos together. But as mentioned before, these are highly algorithmic zones that the market is drawn to magnetically. So now that we're sitting in the purple zone, we could see one of two things happen. Obviously, we could see either a rejection to the downside for a deep retracement, or we could get a confirmation and head for previous day high. Today is not one of those days. On days where Powell is testifying, it's best to just stay out of the markets. Either if he's testifying or if there's a press conference. It's been called the most powerful voice in the markets. The second he starts talking, you'll see the market gesticulate back and forth, big wicks. And then as far as US 30, let's zoom in a little bit more. The 5M. So it's sitting, it just got over the blue zone. And the other feature that we've added, if you missed it last time, is there's now a color variation between the zones. So when you see a dark blue zone, that's stronger. That is stronger than these zones, the lighter blue zones. As you can see, the market gesticulated back and forth here, eventually tapped it, pushed down, came all the way down to tap the NWOG. That's the new week opening gap. Came back up, tapped the blue zone again. As you can see, market pushed past these blue zones because it was drawn to this one. This is where majority of the gesticulation happened. And then went above it to tap this blue zone. These are dynamic zones. The market will continue to paint them out. You're not going to see a ridiculous amount. You'll probably see more, like no more than 3. And the market is on its way and will eventually tap the NDOG. And again, there's your true day. And the top of the purple. So again, similar pattern. We have a downside expansion model. We did have a sell model, but we hit a higher time frame PD array, which is the NWOG. Remember, the NDOG and the NWOG count as higher time frame PD arrays as well. When the market hits these areas and fills them in, it might want to turn back around and head in the other direction. It all just depends on the bias of the day. There you go. So just tap the NWOG, or sorry, the NDOG. New day opening gap. Excuse me 1 second. So this is how you use this indicator. Remember, on days where it's not jam-packed with news or high volatility, there's 4 checklists that you want to go over. First, is it a downside or upside expansion model? It's downside. Do you have a buy or sell model with the blue zone? And there's specifics. A buy model can turn into a sell model, and a sell model can turn into a buy model, and we go over that in the Learning Hub. Today, for example, we had a sell model originally. So we're just going to go over the ticker tape before New York Open, just to show you how you would have maneuvered this bias. So downside expansion model is what we had originally. Now, if you look at the daily candle, did previous day's candle close above or below the candle before that? So don't get too distracted with all the indicator lines here. So here's previous day candle, this green one, Monday, February 10th. Now, did Monday, February 10th close above or below or within the range of Friday, February 7th? As you can see, we wicked below it. We took out all the liquidity below this candle. And we could not close above the wick of the previous day. And that's what we want to see. We want to see a candle body close over the entire wick and candle of the previous day. That's what constitutes as a bull. And if it closed below, that's what constitutes as a bearish sentiment. Perfect example here. This day candle closed well above the body and wick of the candle before it, which meant that our bias going into this day was going to be bullish. So once again, yesterday did not close above or below the previous day candle. It actually swept liquidity and closed within the range. So what's that mean? It means that our bias for this day is still technically bearish. We did sweep, but we closed within the range. On any other day or week, I would actually let this candle print first. I want to have a specific bias. I want it to close above or below the previous day, so I know exactly which direction the next one's going. So when you see something like this, that again is back and forth consolidation, sweeping and closing within the range, you don't really have a general bias. But for this specific session, we're going to go with a bearish bias. Now let's draw it back down. And you'll get used to all these colors. It's like paint by numbers. It's a little bright at the beginning, but once you get used to it, you know exactly what the blue zone is, purple zone, and then these boxes help you identify the buy or sell. So our daily bias, we're going to put in bearish. Now there's one more piece of confluence that we use to figure out our daily session bias. And that's the NYC opening manipulation move. And the indicator paints that out for you. It calculates within the range where that break will be, and that's where you formulate your bias for the manipulation. So right here, it does it with the green lines. So here and here. And there are people that only use this. They only use the manipulation move to give them their daily bias. So if it breaks to the upside first, then that's the false move and the market wants to push down. If it breaks the bottom, that's the false move and the market wants to move up. Now what happened here, we broke up, meaning our bias on any other day where you didn't have any CPI, PPI, or Fed Chair Powell speaking, we would have a bearish bias. But again, that's only one piece of it. You want it to match up with the rest of the confluence. So the fact that it went up, that gave us an idea that maybe it wants to come down. And that actually gave us 4 down arrows, meaning that the bigger move will most likely be to the downside. And keep in mind, this is all before the DR range, before the dealing range is actually formed, before the spotlight indicator is fully formed. Because this is giving us a bullish bias now. So these moves have to be done before 10:30. Before 10:30 Eastern Standard Time. And there's also, we cover this in the Learning Hub, there's certain factors in confluence that can change this opening manipulation move to a bullish bias. I won't go too much into that, but there is a specific pattern in here that would have changed my bias my opening manipulation bias at least, I should say, to bullish. But again, majority of this is still pointing down. This bias, on the other hand, when you flip that manipulation bias, you're going to get a run in that direction until you hit a higher time frame PD array, which we did. We hit the end dog, and we're close to previous day high. So as soon as it sweeps that, this thing could actually start pushing down. But then you want to match that with other confluence. So that's how you mark up and decide your directional bias for the session using the blue zone indicator. Now, as mentioned before, once the spotlight indicator is fully formed, you only want to listen to and use the specific confluence from this indicator going forward. So if I hadn't got a trade set up in this all the way up until the range was formed, I don't care about this anymore. I'm still going to use those zones to see if there's a rejection off of it, but now I'm only focused on the spotlight indicator. We have a bullish confirmation. We have a downside expansion model though still. So I want to see a deep retracement back into a specific zone and then an extension. But even then, because we have a downside expansion model, I want to see if it actually rejects off the 20 EMA or if it just keeps pushing down and going right through the bottom of this, because we have a huge NYC fair value gap here, opening gap, that was never filled in. It was tapped, and the market is still driving up. So obviously tomorrow is, I can't remember if tomorrow's CPI and then after that's PPI, but we have CPI and PPI this week, Wednesday and Thursday. And then Friday, I believe we have some heavy news as well. Again, just waiting for all of this news to clear so we can start trading back to normal. Usually, most traders, as mentioned before, they take January off completely, but now, half of February, there was so much news that dropped. Excuse me. Unfortunately, that's just the name of the game. You don't want to be in the markets during this time. Especially if you're a beginner, if you're just starting off, know that. Know that January and February are the toughest months. Why? Well, think about it. Remember, it's all fractals. So let's go back to the daily candle. So just like we were mentioning here, every candle has an open, a high, a low, and a close. That's exactly how a monthly candle works. You have an open, a high, a low, and an eventual close. Now, sadly, when it comes to the monthly candle, January and February fall into that open, and depending on which direction the market is going, if we're bullish, this is all January and February. Look at this wick. It dropped all the way down here and then pulled all the way back up. And now we're all the way up here. So all of January and February are technically the fake out move of the monthly candle. That's why it's hard to trade these months. There's no definitive directional bias because it wants to fake you out and then pick its directional bias for that month. So there's your January and February open, drop, back up, and now we're sitting right here. And there goes US 30, all the way through the end dog, all the way through the purple zone. So on any regular day, that's all you really want to do. You want to match up all that confluence. Do we have a downside or upside expansion model? Do we have a blue zone buy model or sell model? Do we have a previous day's candle bias? Is it a bull or a bear? And then we look for the manipulation move. And that's not just for New York. We'll go over a couple of things here. That works for London as well. The red zone is, again, another highly algorithmic zone. Usually it frames the London reversal. See those red lines right here? That's the same as the green lines from the manipulation move. Right there. Right there, those pivots. Whichever side is broken first, that's your manipulation move. So London broke down first to the downside, continued to push. That was the false move, came back up into the range, and it didn't fully complete the model. It would have taken out the highs formed in this zone, but we only came midway, and then it manipulated back all the way down. Usually, what we want to do is once we have a break to either side, we want to look for an entry, and ideally we want to go into the purple zone. Take out the highs and lows of the red zone, and then the purple zone is where we would like to end up. But as mentioned before, today, very volatile day, regardless of session. Here's the Asia session. Same thing. The purple zone is usually what frames Asia session. So there's your Asia session. We're still working on this one, but in the I believe by the end of this week, we will have the manipulation move in here as well. I'm just eyeballing it right now. It's right there. And here. So at open, we broke the bottom of this range first. That's the fake out move. So you look for an entry to go long. Back into the zone. It didn't break the top of that zone. And it didn't hit the purple zone. But you're going to have days like this. Nothing is 100%. But that's pretty much how these zones will work. So there's a play in Asia. There's a play during London. The blue zone indicator is very similar to the spotlight indicator, as in you can find a trade setup in every session. You'd be surprised how clean the Asia session actually is using the blue zone indicator. Here we'll go over a couple of examples. Let's turn this into a single cell. Let's go back to, and we can even turn off the spotlight indicator here for a second, just to make it look a little cleaner. So here's yesterday's session. So again, there's the red zone, high and low. The low got tapped first, so then the market was looking for a buy. And it went up, and it took out the top of the red zone. So same thing, it manipulated down first, even though it was just a wick. It wicked down, we would have looked for an entry long to go long. Obviously, you want to use this with other confluence. And then there's your blue zone. As soon as that was formed, the market tapped it, wicked it, and continued up. Here's your Asia session. And as mentioned before, just like with the NYC manipulation move, there are specific rules and certain points of confluence that once you see them, your bias does change. So there's Asia. So Asia hit the bottom first. It tapped the bottom here. Then it continued up. So that was the manipulation move to the bottom. And then the actual move back to the purple zone. The purple zone would have been your take profit. Can even go one more day back. We'll take a look. Now we're on Thursday, February 6th. Everything is sitting inside of a purple zone. But same thing. So there is your bottom, and there's your top. So the market took out the top first. That was the manipulation move. It gesticulated back and forth, and then it dropped and took out the bottom of the red. Took the whole session, London session, to do it, but it did it at right there, 8:30, 8:25. And then the Asia session, way bigger range, but there's the high of the Asia session. There's the low, not of the Asia session, of the manipulation move. And we swept the high first. So that meant that was the manipulation move, and the market came all the way down to hit the end dog. So for Asia, what we're looking for is a sweep of the manipulation move and then a return to usually end dog, which is right there in the aqua line. For the London, we're looking for a sweep of the red zone. That's the manipulation zone. That's the manipulation move. Either we sweep the high or the low, and usually we look for a return either to the top of that range or to the purple zone, which is what it was sitting in. That's how you use all of the confluence together. Let's get rid of all these drawings just so it doesn't get messy. As mentioned before, today, majority of the bias was to the downside. Now the market, so the indicators painted another blue zone here. It's reacting off of it. Most likely, as soon as it gets below the blue zone and the purple zone, this thing might want to just push back down. Let's turn the spotlight indicator back on. So again, we did get a bullish confirmation. We could bounce off the blue zone here, push all the way back down to at least the green, which I believe is that Asia's fair value gap? Yeah, that's Asia's fair value gap. There's London's fair value gap sitting inside New York. No, but we're not really looking for a trade setup today. Sadly, we won't be looking for a trade setup this entire week. CPI, PPI. On days where you do want to trade CPI and PPI, like it's just the New York session that's actually volatile and you want to avoid. So anytime I tell you, hey, tomorrow CPI, PPI, avoid trading, what I'm referring to is the New York session. The Asia session, um, can be relatively clean. The London session is the only one you got to worry about. You don't want to get stuck in a trade in London session that lasts you all throughout uh, the night and into the morning, and now you're stuck near CPI news or PPI news, which drops at 8:30. So you got to be careful with the London session, but Asia session, uh, especially after the news is dropped and the dust clears, even the afternoon session, those are fine. It's just the New York morning session you want to avoid during those heavy news drops. So now we're back at the purple zone. Let's see what kind of reaction we get here. Not interested in any trade setup. Just doing more or less some ticker tape reading. The other things we can cover right now, actually. Let's bring US 30 back. US 30, also bullish confirmation, well above the blue zone, well above the end dog. There's previous day's high. Now you don't have to actually like mark it out yourself. You can just back out and you can see everything. These are all the main points. When we're talking about higher time frame PD arrays, other than the fair value gaps that you're going to have to go in and mark out, like the 4-hour and the daily fair value gaps, other than those, everything is right here. There's previous day high low. You got your weekly range with the aqua line. You got your NDOG and your NWOG. Those are the primary ones during an actual session. So now when you're doing higher time frame market analysis, you just have to mark out your daily and your 4-hour fair value gaps. That's it. Everything else has been done for you. We're green across the board right now. And this is another day that I personally would avoid if I was trading, even if there was no news. When all my confluence is showing me that this market wanted to push down, and instead it pushed all the way up, and it's this close to previous day high, and we just got a bullish signal and a green box. It makes me, even though we have all of our EMAs are green, it just doesn't give me confidence. This could be one heavy manipulation move. Doesn't have to be, but I'm saying if all my confluence was downside, we have a downside expansion model, I had a sell model, I had a manipulation to the upside first. We've already tapped the end dog. The daily candle bias was neutral. Wasn't bullish, wasn't biased, but I chose to see more or less bearish sentiment just because we're trying to mark this up. But if it was any other day, I would have actually let another candle print just to see which way the market actually wanted to go. But for the time being, let's say it was bearish. Now all my sentiment is bearish. So I'm not keen on taking a buy now that I have a bullish signal here and we're green across the board. I'd rather just sit this out, even if it goes all the way up, and that's fine. That's the whole point of being a high probability trader, 70% or higher. You wait for all the confluence, because then you can't feel bad about it. If I had an upside expansion model and a buy model, and we broke, the manipulation move broke to the downside first, and my candle was green, my daily candle, and on top of that I got a green box, and I got a bullish signal, and we're green across the EMAs, I can't feel bad about taking a buy there. Because all the confluence was telling me that it's going in that direction. The only other thing would be, it's no different than, again, jumping into your car and heading out and getting into a car accident. It's not your fault. You couldn't have seen that coming. But right now, those are the reasons. And it's most likely, again, because Fed Chair Powell is testifying. They want to create that uncertainty during that time. But this will be a short session since we're not trading. Just wanted to go over a few things. And we'll continue to show you and showcase more of these features of the indicator and the strategy. Last night, for example, I did not get the best trade setup in the morning, so I traded gold futures in the during the Asia session, and it was clean. We had a manipulation move, we had a setup, and then I took that right into the end dog. Clean. You can't get fixated on just the morning session. I didn't get a trade set up. This sucks, or hey, there's too much news. Yeah, there is, and it can be. It can be just convoluted and make you want to avoid trading, but it doesn't mean that the Asia session won't be clean or the London session won't be clean. Look at this London session as mentioned before. False move, down, entry, back up. And this would have been a safe trade. You would have, even though it didn't hit your target, your TP obviously would have been the top of that red line. You would have immediately been in a safe trade right around here. You would have moved your stop losses to break even, taken some off the table. You would have been fine. But it's as simple as that. As soon as it broke the red zone, and again, there's one other thing that you want to look for, but you want to watch all the videos in the Learning Hub. There's your entry. But there's other trade setups, be it London, be it Asia. You're going to find things, especially if you work early in the morning, you're home by 5 o'clock. This Asia trade setup, for example, let's go over gold. I'll show you guys the actual gold trade that I took yesterday. And keep in mind, this is not financial advice. We're just going over rules of the actual trade setup. It's looking really messy here. Let me clean this up. So there was your false move. Market manipulated up. And then on a 1M, 1 minute time frame, I found a setup here. Rode that all the way down to the end dog. Right there, just tapped it. And it was quick. Look at this. This is the 5 minute time frame. So in 5, 10, 15 minutes, less than 15 minutes, it had already tapped my TP. And that's a big move. This is gold futures. Let me turn the spotlight indicator off. And I didn't use the spotlight indicator at all, actually. I just used the blue zone indicator. And we'll switch from gold futures to, let's look at the actual gold against the US dollar. Just looks a little cleaner sometimes. But yeah, simple as that. There was the top of the manipulation range. That was the bottom of the manipulation range. So right now, New York paints it out. London, we have these red lines that paint out the manipulation move. On the next iteration, we'll have the indicator paint out the manipulation move for you. So anyways, it broke to the top, and then it didn't really let in an entry here. And then on a 1M, there was a fair value gap, and then it dropped. And even if you didn't catch that 1M, you waited for this 5M. It's a big fair value gap, but could have caught it here, 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 came back to the end dog, and then finally pushed through the end dog, took out the purple lows. But the end dog is always my take profit. It's usually the end dog or the bottom of the manipulation move. So that green line. But again, as mentioned before, both of those confluences were on top of each other. So I'm going to aim for the lowest one. Could have even aimed for the purple zone actually, but didn't want to press my luck. So it's as simple as that for the Asia session. And for the London session, wasn't as clean. But once you have a directional bias already, so I already know that Asia wants to push down. So when London manipulated to the downside first, then my bias didn't suddenly change. I wasn't looking for a buy setup. And as mentioned before, there is one move that can change your bias. And we had that in here. So suddenly I'm no longer looking for a buy, and my Asia bias was already bearish. So I wouldn't have looked for a buy entry. I wasn't looking at this at all, but. So you'll either see a trade setup or you'll see that the directional bias doesn't match up with the manipulation move, and therefore you just pass on that trade altogether, just like today, right? That's kind of what we did today. If we had been trading, my directional bias was all bearish for NAS. So even though we got a bullish confirmation and the market continued to push up, I'm not looking for a buy. We manipulated upwards. So better to just avoid it. Day trading isn't everyday trading. If I don't see my trade setup, I'm not interested. Instead, I'd rather go jump onto the Fractal Effects website. Oops, sorry, that's the portal. 1 second. Go all the way down. Either check out the Market Watch or our blog. Now for Market Watch, you have to be signed up. Oh, I need to fix that. You need to be signed up in order to read majority of these. But we give you direct market news. And you can find a trade setup right here. There's, again, industry professionals telling you their advice. This is just direct market analysis, projections, all from analysts, all from experts. Or you can check out the blog section. And again, you can find a trade setup here. What they're saying about gold right now. what they're saying about crypto right now, what the big investments might be, the tech stuff. How far is it pulling back to? And then you look at the stocks that are being mentioned, and then you do your own market analysis. This is the whole point, to make you proficient. We're not giving financial advice. We're telling you how to do your or be your own financial advisor. That's the purpose. You should be able to read a chart. You should be able to do top-down market analysis. No different than a musician being able to read a music sheet. And this is what you do on days where it's completely manipulated, on days where there's heavy news and you can't seem to find your trade setup. Go check out the Market Watch. Go check out the blog. You'll find what the analysts are saying and what areas to look at. And then just find that ticker right here. Do your top-down market analysis. Find your best entry. And you can jump into trades there on that side of it. Those are obviously swing trades, longer-term holds, investments. You know, you're holding those. But again, we show you exactly what to look for. Even exactly where your take profit would be if you wanted to get out, if it wasn't even a long-term hold, if you were just looking to flip stocks. But anyways, that's our time today. If you're not already subscribed, please hit the subscribe button, turn on your notifications so you know when we're live. We won't be live tomorrow. And again, we've been missing a lot of days, but at the same time, that's just what kind of month it's been. January, February, a lot of heavy news. Tomorrow, CPI, PPI. We might, you know what, I'll jump on a Thursday. We'll be live on Thursday, and I'll go over a couple of more things as we're adding things to the back end of the site. And maybe we'll just do more educational stuff, ticker tape reading, and maybe even give like projections as far as where we think the NAS might be going, or the markets might be going in general, going into this next couple of weeks. But yeah, that's our time. Thanks again, and we'll be on Thursday.